Did the Santa Claus rally start yesterday? We'll talk about it. That's coming up on 3 Minutes on Markets and Money. After 3 straight days of selling that elicited a lot of emotional fear in the markets, of course, we saw a lot of talking heads on CNBC and other channels talking about markets in turmoil, etc. Well, yesterday, the markets had a very strong rebound rally. Now, yesterday in particular, we talked about the fact that the markets needed to climb back above the 50 and the 20-day moving average so that overhead resistance would be broken and allow the market the ability to rise further from here. Yesterday, that's exactly what happened. The market did clear both the 50 and the 20-day moving average. Now, that does clear the way here for a bit of a rally. Unfortunately, the negative side of yesterday's rally was volume remained weak. Breadth remained very weak. The number of stocks above the 50 and 200-day moving averages remained very soft. Again, not seeing a lot of commitment to this market really in either direction. We haven't seen a lot of commitment to the sell side or the buy side either. That's also not surprising given where we are in this time of year. Most traders are gone for the rest of this year. And again, volume very light, liquidity very weak at this point. But again, nice rally yesterday, helped lift a lot of these stocks back up. This morning, markets are looking to move marginally higher. Again, if we can maintain this break above the 20-day moving average today, that will be encouraging to help push us into that potential rally over the last 5 days of the year as we get into the end of the year portfolio window dressing that we'll see by mutual funds wanting to have those positions on their books for the end of the year. As we've talked about here recently, a lot of the recent action in the markets really looks mostly like portfolio rebalancing for the end of the year. Verizon's been under a tremendous amount of pressure all year long. So again, this looks a lot like portfolio rebalancing where stocks that have been underweighted now because of the sell-off this year have to be brought back up to weight. So we saw some rebalancing buying in Verizon pushing that stock price up here over the last few days. Now, stocks that have been big winners this year are also starting to see some capital gains being taken off the table for capital gains distributions. For example, Apple's had a nice sell-off here over the last few days, bouncing off support here. Again, not surprising here. Again, after that big gain this year, not surprising to see some selling in that position. At the same time, reducing that overweight Apple position back down to portfolio target weight, increasing those Verizon shares, bringing those back up to target weight. That's really kind of what looks like has been going on in this market. And we see this really kind of across the board. We see this in a lot of these areas of stocks that have been big winners, have had big corrections because they've been under pressure for capital gains distributions, and we're seeing a lot of laggards really kind of getting a bit of a lift here. Now, the question over the next 5 days as we get past Christmas and into New Year's will be whether or not we start to see rebalancing of that cash that was raised being put back into some of the previous leaders. And that's what we expect. That's kind of that Santa Claus rally we're talking about. Typically takes you into the first 5 days of January. Once we get past January, though, and the market rallies up here, again, what it looks like from there is going to be anybody's ball game. We've got a reversal of a lot of the tailwinds that supported asset prices over the last year, now becoming headwinds. Importantly, pay attention to what's happening in the small cap space. Small caps have done nothing this entire year. After that rally into March, small mid caps have done nothing all year long. They are now testing the bottom end of their trading range. And if we are going to see a rotation into small cap, mid cap next year, that's going to suggest a much stronger economic environment that we're moving into with potentially lower rates. That is really probably not in the cards. So one of the big risks on asset allocation going to next year is a continued underperformance of small cap, mid cap, relative outperformance of large cap, and a movement into value. That's why we've been talking about potentially looking at that value trade as we move into next year, which would proffer some defense against higher rates, less liquidity, and slower economic growth. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll see you next time.